Vlog. What up? Look at you. Look at you. Fucking soldiers. You're back again? You're back again? Fucking soldiers. Troopers. In the middle of Desert Storm. Desert Storm being the market. But you keep coming back. My soldiers. Troopers. All right, cool. So the first thing that we're gonna do is we're gonna go over the answers to the quiz from the last chapter: scalps, shorts, or the quick and the dead. All right, so I'm gonna read the question and then we'll do the answer. All right, cool. Question number 1: in relation to scalping, what's the trading style, share size, and risk reward ratio? The answer is the scalping style includes multiple trades with share sizes of 500 or a share size of 500 to 1,000 shares and a risk reward ratio of 1 to 2. Number 2, certainly types of numbers play a role in support and resistance. What are they? Whole numbers and to a lesser degree half numbers play a role in support and resistance. Number 3, when you scalp, what is the ideal spread between the inside bid and the ask? She said this a couple times, so I hope you remember even without me reading the answer, but scalp stocks with 1 to 2 penny spreads between the inside and ask, the inside bid and the ask. Let me read that one more time. Scalp stocks with a 1 to 2 penny spread between the inside bid and the ask. Okay, number 4, name the ideal scalping setup components. 1, stock is consolidating in the context of an intraday trend. 2, it moves sideways in a tight, orderly fashion for 20 minutes, preferably longer. 3, most of the candlesticks are closing on their highs. All right, number 5, when you're scalping to the long side, which is better, good depth on the bid or ask? Answer is when you're entering a long scalp, enter with good depth on the bid. Number 6, true or false? When you want to chase a running stock, just place a market order. And this is a true or false question. When you want to chase a running stock, just place a market order and be done with it. You better fucking not. You better fucking not. But the official answer, number 6, false. False. That tactic is only for people who want to explain to their spouses how they lost so much money trading. Number 7, scene. You're in the midst of a successful scalp. Suddenly, the E-mini futures tank, the tick drops below 0, and the market makers evaporate from your stock's bid. How do you get out? Question is fire, though. When good scalps suddenly go sour, issue a sell limit order 1 or 2 levels under the inside bid. Very good question. 8, define the uptick rule. Stocks can be sold short only on an uptick. The trade can take place only if the stock trades above the last tick or on a 0+ tick, meaning the same price as the last uptick. Number 9, if you see a stock touches its upper Bollinger Band but can't close above it, and on the next candle falls lower, where will it probably move next? All right, answer is 9. It will probably head lower and possibly to its lower Bollinger Band. All right, number 10, true or false? To find shorting candidates for swing trades, use daily charts and look for stocks in a downtrend, trading below their 20 MA and better yet, below their 50 and 200-day MAs. True or false? And the answer to that is true. Number 11, is increased volume necessary for a stock to plunge into a downtrend? No. Number 12, true or false? When you're in a short position and the dopey stock starts rising, it's best to move your original buy to cover stop at least 1 or 2 points higher. True or false? And number 12 is false. It's a very bad idea. 13. On a head and shoulders pattern that sets up for good shorting opportunity, look for lower volume on the blink shoulder. My fucking soldiers. My troopers. The answer is right. The right shoulder. Number 14, true or false? Thinly traded stocks are good short candidates. True, for people who enjoy thrill-seeking adventures and have disposable trade. Okay, I'm sorry. True, for people who enjoy thrill-seeking adventures and have disposable trading accounts. She's being funny. Like, that is hilarious. All right, cool. So those are the quiz questions, and we're jumping into chapter 12, which is going to be love your losses. They're a trader's best friend. All right, but before that, let's read the ending center point for the previous chapter. All right, so center point: create a prosperity mindset, but know that you can achieve the total freedom of financial independence if you choose, and it will work to uplift your consciousness and accommodate that level of completeness. John Randolph Price, The Abundance Book. Each and every one of us is entitled to prosperity and abundance. In order to attract it, however, we must take charge of our beliefs and our thoughts. We must focus not only on what we do, but how we label the world around us. Our prosperity or lack of it reflects to a great degree on our level of thinking. For example, as individuals, we may not have a direct impact on global economic conditions, but when we complain about these circumstances on a consistent basis, we align ourselves with negativity. The negativity exerts a powerful influence on our lives and the lives of those around us. Do you hold on to the old belief that righteousness resides in poverty? Do you pepper your thoughts and conversations with phrases such as, I can't, I'm afraid, I don't know how, and there's not enough? Consider replacing these feelings with thoughts and resultant feelings of prosperity, sufficiency, and self-worth. Know that you are a very special person. A unique awareness dwells within you and flows through you. Life is biased on the side of healing, triumph, and success. Assume that inner and outer prosperity is your right. Center your thoughts on your blessings rather than on what you perceive as lack or limitation. Stretch the boundaries of faith in yourself and faith in life. Create conditions within your mind that support positive results and attract them into your experience. Facts. Good shit. Okay. All right, so let's start with chapter 12, and we will do probably about 15 minutes or so. All right, love your losses. They are a trader's best friend. You probably read the title of this chapter and made immediate plans to have me carted off to Pecan Manor. But before you send me to the nut house, hear me out. The success or failure of your trading career does not depend on your gains. It depends on your losses, how you manage them, and what you learn from them. Socrates wrote that an unexamined life wasn't worth living. Guess what? Unexamined trading losses will send you to the soup line. Trust me. I've approached the end of that line spoon in hand more than once. The single most important thing you can do while you learn how to trade, keep a journal of your wins and losses. This is not a self-flagellation diary. In fact, call it your success journey, because if tended to properly, that's exactly where this exercise leads. Either purchase a notebook with a green cover the color of money, or create a new file folder on your computer. When the market closes each day, record your entries. Write down the stock symbol, entry price, and exit price. Start the first sentence, I entered this trade because, and then finish the sentence with your reasoning. Maybe you entered for terrific reasons: orderly chart patterns, high probability setup, 1-to-3 risk-reward ratio, perfect entry point, and good top-down criteria. Still, the trade turned sour. Begin the next sentence with, I lost money on this trade because. Without criticizing yourself, list the reasons your trade went against you. No words like stupid or dummy allowed, just the facts. Study those facts and own the choices that you made. Once you understand what happened, think forward, get on the other side of the lost. Last, right when the situation arises again, I will. Finish this sentence with the steps that you'll take the next time you encounter similar circumstances. The next time, how can you better protect your principal? What would you do to make sure you're trading to trade well? When you execute a particularly awesome trade, include that in your journal too. Study how the trade evolved so you learn to repeat your success. The following trading morning, review your last success journal entries. If you have time, review others you have entered. As I've mentioned before, people who write down their goals prove to be far more successful than those who simply store them in memory. This premise holds true for traders and their journals. The wealthiest traders I know completed this process early in their trading careers. It absolutely always delivers valuable results. 7 suicide scenes, how to avoid them, protect your principal, and live to trade another day. Let's haul some typical losses into the light of the day so we can inspect them. Because I've experienced every one of these losses, you don't have to. Scene 1, stuff happens. You buy a strong stock in a strong market at the right entry point. A few minutes later, though, negative economic news interrupts the routine commentary on CNBC. The market screeches to a halt and does a U-turn. Your stock joins in the stampede to the south and hits your stop. You sell and are out with a small loss. Loss avoidance tactic. There isn't one. You entered a strong stock in a strong market at the appropriate time. Unexpected news happens. When you exited at the proper stop point, your loss represented a calculated risk of the business. Compressed into cold, hard reality, the scene boils down to good trade, unexpected event, stock dives, proper exit action, and small loss incurred. Study and reflect upon the sequence. Looks simple to duplicate, isn't it? You guessed it, the proper exit action usually gets in our way. This type of loss is the only justifiable loss you'll ever take. If you exited at your stop or sooner, you took the correct action. Losses like these are not the ones that hurt you, those that follow are. Scene 2, the good news, bad news, roller coaster ride. Soon after the market opens, you buy a strong stock at the right entry point. You've designated it a day trade. By 11:30 a.m., your stock rises to the next resistance area, 2 points away. Instead of exiting at this predetermined profit objective with $2 earnings, you hold on. You think, surely, after the market's midday blues, the stock will conquer the next resistance area and earn another point or two. Fast forward to 2:30 p.m., same day, your stock and the market grind through the next hour, apathetically. Could it be the unemployment numbers due out tomorrow? Finally, your stock drifts down to your entry point, sinks beneath it, and hits your stop. You sigh and exit the trade. I can't count the times early in my trading career that I've ridden a good stock to find profits, refused to sell, and ridden it all the way back down to my stop for a loss. Yes, it happens to everyone. No, that doesn't make it feel any better. Lethargy and optimism, or greed, are the operative words here. You get caught up in the euphoria of what may happen instead of looking at what is. Loss avoidance tactic. First, in a day trade, when a stock makes 2 points, then nears resistance, take your money and run. I don't care if the thing points to Mars, do it anyway. 9 times out of 10, you'll congratulate yourself later. Second, a stock that smacks up against resistance at 11:30 a.m. will likely pull back. The midday doldrums will push it down, if nothing else. Third, stay abreast of major economic reports such as unemployment reports, the CPI, or Consumer Price Index. Institute of Supply Management, and PPI, or Produce Price Index. These reports come out monthly and are usually announced at 8:30 a.m. or 10 a.m. Eastern Standard Time. Financial network commentators discussing bond futures reactions will tell you whether or not the market liked the news. For explanations of reports and their schedules, go to my website and then click on Tutorials and Economic Calendar. The day prior to a highly anticipated economic report, the market typically quiets in the afternoon. Many professional traders, including floor traders in the exchanges, go home for the remainder of the day. Pros refuse to commit to a position when economic news threatens to yank it from underneath. Where we go? So join them. Exit some or all of your positions before lunch. If the market decides to rally, you can always jump back in. Fourth, the market has become so volatile that you might consider the morning and afternoon sessions as 2 different days. Many times in the afternoon, the market reverses its morning action, so don't assume that because your stock is strong in the morning, it will continue to rise later in the day. Maybe it will, maybe it won't. Closing out a winning trade or 2 before lunch promotes healthy digestion. Remember the smart trader saying, you'll never go broke by taking a profit. Okay, scene 3, drop the stop game. You're scalping, your target stock consolidated nicely and showed signs of breaking out. You bought a small position and then added to it as it broke out on strong volume. Perfect entry points. Suddenly, the tide turns really fast and the stock drops like a stone, right through your stop loss. You chase it down. Instead of issuing a sell order a few cents below the bid or even a market order, you stubbornly shoot orders at the current bid. It dissolves and gives way to the next level down. You cancel and shoot again. Oops, bid gone. Doesn't anybody want to buy this stock? You will? No. Within minutes, your stock grovels 2 points down from your original stop. Then a light bulb flashes in your mind. You'll switch this from a scalp to a day trade. No problem. You check the day's initial low for a new stop point. Uh-oh, stock's already crashed through that. What about yesterday's low? Gulp, that was a half point ago. Worse, you're down almost 3 points. But wait, your frantic mind flashes another light bulb. This isn't a day trade. Doesn't have to be, as of right now. It's a swing trade. Swing trades have much wider stop parameters than day trades. Sure, that'll work. With stomach churning and palms sweating, you pull up a daily chart and search for yet another support zone. Anywhere that the stock might find buyers, gloomily you find it, 4 points below the current price. Get the picture? Loss avoidance tactic. When you enter a trade, designate the time frame. Figure your risk-reward analysis, plan your trade, and stick to it no matter what the obstacles are that jump into your path. All scalping entries do not a swing trade make, or a day trade for that matter. Please raise your right hand and repeat after me. I swear on my mom's mouse that from this day forward, for as long as I trade, I will never ever ignore my stop parameters. Scene 4. How not to catch a falling knife. It's a grim day at the ranch. Mother Market heard a Fed watcher mutter the words rising inflation on CNBC, and she's fallen into a sullen mood. The tick wallows in the negative 500 area. The trend is climbing over 1.2. Unhappiness prevails. You're flat. Thank goodness, and you see nothing you want to sell short, but your trigger finger itches. Yeah, she is painting such a beautiful picture. There's a stock, a leader in the pharmaceutical industry, that's plummeted for a week. It's got a bad case of the uglies. Maybe makes sense because that industry is ailing as well. Betcha that stock will reverse when it lands on its 50-day MA on a daily chart. That should be today. You pull up the chart. Oops, it just did. It just hit the 50 MA and it popped 50 cents. Sweet. Just like the stockbrokers say, you'll buy low, sell high, you buy. After a brief rally, the market resumes its downward plunge. Your immediate profits get wiped out and the stock drops through your stop and slices down through its 50-day MA on the daily chart. You stare at your screen, paralyzed. It slides another point, then another. You let it drop, unwilling to gag on such a large loss. By the end of the day, you were down 4 points. Numbly, still holding the position, you hear the closing bell. Loss avoidance tactic. A wise trader's saying goes, never try to catch a falling knife. First, if the market trends in a negative direction and you feel signs of boredom, leave. If you're not in front of your computer, you can't commit one of the foremost novice trader mistakes, over trading, or just trading for no reason. What if the market reverses while you're gone and you miss a couple of opportunities? That's part of the game, just shrug it off. Second, no matter which way the market trends, the trend is your friend. Most stocks follow the market's direction. Swim with the current. Third, when the stocks drop, they drop for a reason. More sellers than buyers, nobody wants them. Traders call stocks like these falling knives. Please don't try to catch one. The result can hurt. Buy low, sell high, works well in real estate. It doesn't always work as well in the stock market, especially in short-term trades. Remember, when you choose a stock to buy, it's like choosing players for your ball team. You don't choose the guy with a broken arm or the girl who's clumsy. You choose the strongest people available to make a winning team. When you're trading, you choose the strongest stocks to make winning profits. Scene 5. Hey, wait for me. It's 8:30 a.m. on a weekday and you're watching CNBC. The stock index futures are up nicely. The Dow flew into record territory yesterday and things look rosy. You're sipping your coffee, anticipating the money you'll make today. Your favorite brokerage stock listed on the NYSE reported earnings last night after the bell, and they were golden. Beat the street by 10 cents. By 9:31 a.m., CNBC says the stock isn't open yet, but when it does, it'll open higher. It dawns on you that you could get your order in ahead of the opening crowd. You turn to your computer and enter your order. You've designated this swing trade. You place a buy order for 500 shares at the market. When the stock finally opens at 9:35 a.m., it gaps open to the upside, 2 points. You get filled a point higher, no problem. You know once it starts running, it'll never look back. 5 minutes later, and you're right, it's up another point. Fantastic, heck of a trade. You take a short break for a phone call and invite some friends out for dinner to a fancy restaurant, your treat. Then return to your computer. Market's still going strong. Indexes, tick, trend, futures, all fine. Your gaze moves towards your stock. Huh? Good grief, it's fallen 2 points. Worse, it looks like it's in a free fall. The bid's dropping like a brick. When it tumbles through the session's low, you jump out with a loss. What happened? Loss avoidance tactics. First, never place a market order to buy before a stock opens before the day. A market order placed before the opening bell or before the stock opens will get filled at the absolute top price possible. A subsequent gap and crap. Opening price gaps that fill quickly. Scenario can deliver an instant and devastating loss. Second, monitor a stock with good earnings announcement. Don't buy until you're sure of the direction it takes. This might take 2 or 3 days. Heard the old trader saying, buy the rumor, sell the news. It's true. If the stock ran up big time before its earnings announcements on rumors of the good earnings, that run up absorbed the pending news and resultant gains. What's going to happen when the news is announced? Profit taking, fast and furious. But, you reply, the stock ran up after it opened. Somebody bought it. Who made it do that? You. You and Joe Public, who acted on logic. You thought good earnings equal rising stock prices for the rest of the trading day. Sometimes, but not always. Third, when the stock ran up in the days before the announcement, the specialists in this case had to sell their own shares. Market makers are forced to take the same stance. Remember, when buyers outnumber sellers, specialists and market makers have to short the stock. Do you really think they'll let it run to infinity without slapping it back down again so they can cover their shorts? Not hardly. Specialists and market makers aren't known for their charity work. They fill orders at the open, then drop the bid as soon as they can to make their own profits. After you panic and sell it to them at bargain prices, they raise the bid and sell it to someone else at a higher price. Conclusion. Don't jump into a good earnings stock until the market digests the news and you can lock into its genuine direction. All right, cool. So that's roughly 15 minutes worth. This chapter is hilarious. It's so indicative of like true trading behavior, especially when you're a beginner. And like these are things that can literally persist. I mean, for years if you let it. So you really need to understand these things. You really got to watch your trades. You really need to study them, especially the losses. The losses are the most important because if you're winning, like your winning trades are not the problem. Your winning trades are making you money and it's building your account. Your losses are the things that's tearing down your all the profits that you've gained, and it's tearing down your principal. So super, super important. Watch your trades very closely that you're losing. If you can record yourself, like your actual screen as you're trading, and you can actually kind of see it play out later on, so you can go back and you can thoroughly study your losses. That is one of the best things that you can do. But also taking notes on it and, writing down like, why did you jump into this trade? What were you thinking? What did you see? What were the indicators that you were following? All of these things can help you to prevent making the same mistakes over and over again. So anyway, this chapter was starting out really good. I'm like almost sad to almost be done with the book. But yeah, that's it for today. And we'll do the rest of the second half of the chapter tomorrow. Thank you for joining. See you guys tomorrow.
She recognized she cannot find no one else like me. Hey, hold it down, stay beside me. It only took a lifetime for you to find me. Whoa, I know you've been hurt, but do not fight me. Me ever let you down? No, that's unlikely. No, I confused you in the past, but that's behind me. Now I'ma give you all the time I got left on my timepiece. Whoa, I'm smoking dank. She double cup. I got my hands all on that booty, bitch, we coupled up. Straight bitches acting like they gay cause they in the club. Both me and my bitch recruiting bitches. This ain't what you want. Give her every reason in the world to give it up. I guarantee when she with me, she will not spend it up. I guarantee when you with me, you get that pussy up. I guarantee I still respect you when the morning come. She may be my girl, but I treat her like the wifey. She belong to me, she know better than to try me. Know it's much too soon for you to usually go this far, but I know your walls up. I know you cautious, but I respect that you can see a bitch like me is bossed up. I deserve to get it now, you know you got my heart, love. Hey, fuck all the what ifs and what could be. I'ma make your last name mine like it should be. She may be my girl, but I treat her like the wifey. She recognize she cannot find no one else like me. Hey, hold it down, stay beside me. It only took a lifetime for you to find me. Whoa, I know you've been hurt, but do not fight me. Hey, me ever let you down? No, that's unlikely. No, I confused you in the past, but that's behind me. Now I'ma give you all the time I got left on my time. You be looking like a bad bitch, but acting like my good girl. Speak a little proper, but you throw that pussy hood, girl. I know that's something that your family won't approve of, but tell them when you hit my phone, I be right there. Tell them I give you time and talk about your career. Tell them they raised you so well that no bitch will ever compare. Tell them open they heart, you open your legs. Baby, now tell them who eat that pussy the best. You the only bitch that you gon' see up in my call list. Fuck the time of the month, you can get it regardless. Other bitches, they can't hold you down like I can. I come with fucking benefits, now bitch, come get this stipend. Fuck that pussy up like you ain't nothing but my side bitch. Had that bitch screaming like she in a fucking crisis. She suck on the strap like the motherfucker my dick. You can get a lifetime, but first come get this nice shit. She may be my girl, but I treat her like the wifey. She recognize she cannot find no one else like me. Hey, hold it down, stay beside me. It only took a lifetime for you to find me. Whoa, I know you've been hurt, but do not fight me. Hey, me ever let you down? No, that's unlikely. No, I confused you in the past, but that's behind me. Now I'ma give you all the time I got left on my timepiece. She may be my girl, but I treat her like the wife. She recognize she cannot find no one else like me. Hold it down, stay beside me. It only took a lifetime for you to find me. Whoa, I know you've been hurt, but do not fight me. Hey, me ever let you down? No, that's unlikely. No, I confused you in the past, but that's behind me. Now I'ma give you all the time I got left on my timepiece. Whoa.